The top business stories live from the Sky News City studio. The trial of former crypto billionaire Sam Bankman-Fried gets underway. We'll be live in New York. Ofcom's expected to ask for an in-depth investigation into the supply of cloud infrastructure services in the UK. Plus, Krispy Kreme commits to doubling the scale of its business in the UK. Good afternoon. This is Business Live with me, Ian King. In a moment, we'll be live in New York for the opening of the trial of the former crypto billionaire Sam Bankman-Fried. But first to some other of this afternoon's top business stories. And the communications regulator Ofcom is expected to ask the Competition and Markets Authority to carry out an in-depth investigation into the supply of cloud infrastructure services in the UK. Reuters is reporting that Ofcom will on Thursday publish its final report on the market, which is dominated by Amazon Web Services and Microsoft. The pair are reckoned to have a combined market share of between 60 and 70%, with their nearest rival Google having between 5 to 10% of the market. The property, mining and transport company Banks Group has sold its renewable energy division, Banks Renewables, to the Canadian asset management giant Brookfield for a reported $1 billion. Banks Renewables unit operates 11 onshore wind farms across Scotland and the north of England, and it has other projects for solar and wind in development. Banks Group, which is based in Durham and which is owned by Chairman Harry Banks and his family, said Brookfield's greater resources would enable the fuller development of opportunities that Banks Renewables was introducing. And Greg said today it may launch an overseas trial next year, 15 years after abandoning a loss-making venture in Belgium. Roisin Curry, the chief executive, said expanding overseas was a live project on which a small team of 3 was working. She was speaking as the bakery chain reported a 20.8% rise in sales for the 13 weeks to the end of September. Like-for-like sales, which strip out the impact of new store openings and refurbishments, were up 14.2%. And staying with eating now, the restaurant chain Tortilla Mexican Grill has reported a loss for the half year, despite a rise in sales. Well, the company saw a 22% rise in half-year sales to £32.7 million. But the shares have fallen by 8% after the UK's largest Mexican dining chain slipped into the red in the absence of the lower VAT rate and business rate support provided as part of the UK government's COVID support package a year ago. It reported a half-year pre-tax loss of £615,000 compared with a profit of £264,000 a year earlier. I've been speaking with the chief executive, Richard Morris.
Well, we're very bullish about these periods. These are always our very strong trading periods as a business when all the students are back. You know, we have a lot of our sites in student towns and the city centres are buzzing, and London continues to be incredibly busy. So we're very bullish about the next 3 months. We've launched one of our biggest promotions a couple of weeks ago, which is our Tortilla Sunsets, where we're selling beers and margaritas for £2.50. It's quite an extraordinary offer. We're getting a lot of traction with it. So if you come in, and we've got some lovely sharing Mexican dishes, some evening dishes now. So we're pushing hard on our evening sales, and so far it's been very popular. I would imagine it's only going to gain more and more momentum as we go through the coming months.
What's the sales mix just now between takeaway and eat-in?
Post-COVID, obviously COVID, we were doing delivery. It was massive. It's levelled out at circa 70% eat-in, 30% takeaway, which is what we anticipated it doing. Drops off a little bit in the summer months, clearly, because a lot of people are away. But now that's the sort of levels that we trade at.
Obviously, with food inflation having been a big issue, a lot of restaurant chains changed their menu and offered cheaper options. Is that something that you've had to do?
We took a view earlier on in the year that we wanted to try and re-engineer some of our menu items without cutting portions or without sort of doing anything overly dramatic that was going to affect the cost for the customer. One of the areas we've changed is we looked at a product. We looked at our chicken product. We now are doing a different chicken product, which I think is fantastic. Chicken pibble. It's a slightly spiced chicken, which is really, really good. And that's replaced the char grilled chicken that we were doing before. That has helped us take quite a lot of cost out of the business. You can imagine with grilling stuff, the utility costs, the extraction, So that's helped us. It's a great product. It's been received incredibly well. And that's helped on some of our margin control and some of our labour costs. So we've done a few things around the edges on our menu, but we're very, very, very consistent around trying to be value for money. A lot of businesses you'll have seen, it's expensive to eat out these days. We've tried to keep our prices as competitive possible, and I think we've managed to achieve that.
Are you starting to see food inflation abating yet?
Yes, definitely. Yeah, it's good news all round, really. We're seeing benefits around utilities and benefits around food costs. I don't think we'll see the same level of food costs as we did pre-COVID, but we're coming to terms with that now. And there's definitely an easing of costs in the sector, which is good news for all of us.
Now, in May last year, you bought Chilango. Has that performed in line with your expectations?
Better than we anticipated. There were a few eyebrows raised about buying a central London business when there were all these concerns about people working from home. We loved the business. We thought they had great sites. We converted 5 of them into Tortillas, and we've seen upwards of 25–30% sales increases in those locations since we converted them. So that has been a real tick in the box for us. It shows that we can buy businesses, convert them, and put sales and profit onto those sites. And it only went to support our consistent belief that the City of London was going to be incredibly resilient coming out of COVID. And although people are working probably 1 day, 1.5 days a week at home, in the days that they're in London, it's crazy busy.
Now, you've since the end of this reporting period, you've opened 2 new sites, one in Belfast, one in Bracknell. How have those performed?
Well, I mean, Bracknell's been great. It's a small little kind of village. It's a town in Berkshire, in a really nice shopping centre area. Shopping centres have been booming post-COVID, so that was a great site for us. That's performed really well, above expectations in early days. Only been open a couple of months, but performing well. Belfast has been an absolute superstar. We've been keen to get into Northern Ireland for quite some time. We've opened in Victoria Square in the centre of Belfast, and it's an educated market. There are Mexican operators over there that perform well. We wanted a piece of the action. We've done that. It's been very, very well received, and absolutely delighted with the start that we've had in Belfast. As a non-known brand over there, to be taking the revenue we're doing is fantastic. So we're unsurprisingly looking for other locations in that part of the world.
20 years ago today, the US donuts giant Krispy Kreme opened its first UK store in Enfield. It's marking the occasion with a commitment to doubling the scale of the business. Joining me now is Jamie Dunning. He's President and Managing Director of Krispy Kreme UK and Ireland. Jamie, good to see you this afternoon. How many more outlets are you looking to open then?
Well, we think of our outlets as points of access. Today we have about 1,800. That's both our partners and our own stores. And we think there's room in the market to double that in the next 5 years through a combination of extending our partnerships and building our own stores in the same way.
So who aren't you partnering with at the moment that you would like to be?
Well, that's more to do with the channels that we're not in today. So we have a good footprint in our grocery partners, our service partners. Certainly, we think there's space in the QSR channel to partner, and wherever else.
Sorry, QSR, you better explain what that is.
Quick service restaurants.
Gotcha, yeah.
Sorry, thank you for that one. And certainly wherever else there may be a mission that is complementary to the sharing of donuts, then we think that's where the headroom will come from.
OK, and what about standalone stores?
Yeah, we have about 140 of those today. This being our 20th birthday, as you kindly mentioned, we're also using today to announce that we are going to be opening our flagship store on Oxford Street at the beginning of next year, and that very much marks our confidence in retail, in our brand, and there is no better way than to enjoy a hot original glazed donut, and that's where you'll find it on Oxford Street in next year.
Right, so you've got a site earmarked?
We have. We agreed the lease last week, so we are going to be in construction in the next few weeks, and we'll open early next year.
Very good. I mean, Oxford, a lot of people have bad things to say about Oxford Street with all these US candy stores. You're confident that this is a temporary sort of thing?
I am, and more the point that our confidence is in the renovation, the Renaissance really, of the Tottenham Court Road end of Oxford Street. There's a great amount of investment that's gone into buildings and retail there, a very complementary retail set around where we are going to be located, and we feel very confident in the prospect.
Are there parts of the country where you feel you're underrepresented?
We're reasonably well represented across the UK, but certainly outside of Greater London, most of the UK can take more Krispy Kreme. We reach about a third of the UK population annually at the moment. And we think, well, in fact, we know that about half the population enjoy sweet treats that include donuts over a year. So that's where we see the headroom to both be physically present and clearly improve our digital proposition as well. And
you're head of the business in Ireland as well. How does the Irish business shape up?
It's doing beautifully. We celebrated 5 years with our friends in Dublin last week. Clearly, there's a great sense of Americana affinity to the Irish population, and so we've seen huge growth there this year and continue to invest in that market as well.
And what do you look for in the site when you open a standalone store?
We look for whether the consumer or the shopper is in the mood for sharing. So there is a convenience aspect to that. There is usually complementary fascias or other retailers that we know we work well with, and where clearly the price is right, because there are certain aspects of retail where it just wouldn't work for our model, but we've been very successful at finding our locations.
Who do you regard as your primary competition?
We like to think we have a reasonably unique place in the market. When we joined the donut scene, as it were, 20 years ago, I think you might agree with me, donut was perceived as a sugary, fried, 5 in a bag at one of the theme parks we might have gone to, and we very much raised the bar, bringing freshly made, hand-finished donuts to the marketplace, and we've defined the donut category. So in the consideration set of where consumers might want a sweet treat, there is a competitive choice within that, and clearly other donut brands have come to the market since we've been here, but we'd like to think that we have our own space in that premium donut category.
Obviously, food price inflation has been pretty rampant over the last couple of years. What sort of price increases have you been able to push through?
We've been in line with the bakery category, so certainly double-digit last year, but we've also gone to great lengths to absorb as much of that cost as we could. And certainly, I'd say there is still some inflation in the supply chain, but we're seeing that start to taper off now, and we're grateful for that.
All right, Jamie, lovely to see you this afternoon. Thanks very much indeed for joining us.
Ian.
Thank you. Still to come here on Business Live, we're going to have a look at how the markets have done this Tuesday afternoon. Don't go away.
A lot of customers, yes, that's the case. And a lot of their customers, the end users, are also demanding that change. And we saw that a lot with the first phase of the plastic ban when plastic straws went. I suppose there is an awareness issue with some customers out there, or some of the hospitality market. And as of this morning, they can't use the product that is perhaps left on their shelf as well. So there's going to be an element of people skipping product over the next few days. I think there is an impact. We've seen the price of some of the more sustainable options. So if you take cutlery, the most obvious switch is to a wooden product rather than a plastic product. We've seen some of the prices come down over the last 6 months or so, partly due to the volumes that are increasing in the market. So the step isn't huge, but there is an implication, and obviously it's part of a bigger picture of increasing costs for our customers, which means they'll have to put their prices up to end users. A lot of customers aren't sure what is and isn't banned, so we're getting asked quite regularly if plastic pints and halves are now banned. They're not. Although I suspect they're on the government's wish list. There are also elements of confusion around, so if you take polystyrene containers, they are banned if you are selling a finished food item in them. However, if you are perhaps a butcher's and you're selling a non-finished product, so raw meat, that's still legal to sell that. So there's potential for some confusion there. One of our other concerns as well is that there are appearing on the market manufacturers and importers rebranding disposable cutlery as reusable cutlery, and maybe making it a slightly thicker product. So that's certainly not within the spirit of the ban, but you might see people trying to get around it to an extent with that.
The 5 of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Welcome back. We're going to New York now, where the trial is getting underway of the man who used to be referred to as the king of crypto, Sam Bankman-Fried. The founder of the cryptocurrency exchange FTX is facing charges of fraud, laundering and campaign finance violations. Well, joining me now live from New York is Kate Rooney. She's the technology reporter at our sister channel, CNBC. Kate, good to see you this afternoon. Remind us how we got here.
Ian, great to see you. So it's hard to understate how big of a deal Sam Bankman-Fried was a year ago. He ran this $32 billion crypto exchange. It was the fastest growing, most valuable cryptocurrency exchange out there. They were advertising at the Super Bowl here in the US. They had their names on stadiums, and Sam Bankman-Fried was quite influential in Congress in Washington, D.C. He was a big donator to some of the biggest members of the House and Senate, and was really trying to shape some of the legislation. Fast forward to November, the company collapsed in the span of about a week. So company goes bankrupt. FTX CEO Sam Bankman-Fried, who's on trial today in the next 6 weeks or so behind me, we got the courthouse here, jury selection is starting. He resigns, he steps down, company goes bankrupt, and he's being accused of what prosecutors say is one of the biggest financial crimes and cases of financial fraud in U.S. history. That's what they're alleging. Sam Bankman-Fried has pled not guilty. He says he didn't know about some of the financial issues over at FTX despite being the CEO, and he has maintained that it was a case of bad risk management versus intent to defraud someone. So that is really how things are playing out and what's at stake here. But again, what some are saying could be one of the biggest cases of financial fraud really that we have seen here in the U.S. ever.
And Kate, talk us through the charges he faces. How long is he facing in prison if he's indicted?
So it depends. Each of the charges has about a maximum sentence of 20 years. So there are some estimates that say, up to 100 years, although those could overlap. It could be more of a 20, 30, 40-year sentence if those get combined. It's up to Judge Kaplan at the end of the day if he is charged, and we'll see. And there's also a long series of appeals that could happen. So even if this trial goes quickly, there's the expectation that they could appeal. This thing could drag on for a long time. But the thing he's really charged with, and what happened here, according to prosecutors, is that he siphoned customer money from his cryptocurrency exchange, FTX, to another company, a hedge fund that he had founded. So he was illegally using customer funds to prop up this other sister hedge fund. And so that's really the crux of what the prosecutors allege happened here, that there was a relationship between those two companies that FTX customers didn't know about. Meanwhile, there are hundreds of thousands of people who can't get access to their money, and it could take years until anybody really sees any of that money again.
All right, Kate, got to leave it there. Thanks so much for joining us. Lovely to see you. Well, European equities have fallen to 6 months' lows this afternoon. That's on increasing expectations that interest rates around the world will remain higher for longer. I think I can show you the continental European indices. I can tell you they're all in negative territory, all down by around 1% or so. Here in London, similar story. The FTSE 100 has finished down, not as much as on continental Europe. FTSE off 0.5%. Mining heavyweights doing much of the damage there. In terms of percentage fallers, well, Burberry is among the leading blue chip decliners this afternoon, off 3.5%. That's on adverse broker comment. Outside the FTSE, Boohoo has fallen by 5%. That's after it reported a 17% drop in half-year sales. Over on Wall Street, well, the main stock indices have all opened to the downside this afternoon. The breakfast cereal maker Kellogg's is off 6%. That follows its demerger from its former parent company, now called Kellanova, which is the snacks company behind brands such as Pringles. On the foreign exchange markets, well, the overriding theme is all about dollar strength this afternoon. The US dollar It's on the point of hitting 150 yen today for the first time in a year. Sterling off just under 1/5% against the greenback, more or less unchanged against the euro. Single currency also down against the dollar. As for the oil price, well, it sold off sharply yesterday and briefly it traded below $90 a barrel for the first time since 8th of September. It's rallied this afternoon, though. A barrel of Brent crude will currently set you back $91.06 a barrel. That's up just under 2/5%. Well, joining me now is Robert Ulster. He's Chief Investment Officer at Close Brothers Asset Management. Robert, good to see you. Let's start with a bit of macro. We had some data from the British Retail Consortium this morning, which was quite interesting. First drop in food inflation month on month for 2 years nearly.
Yeah, that's right. We had food inflation falling 11.5% to 9.9% in September. So still food prices going up, but at a slowing rate. And if you look at the graph, this is now, it looks like a definite trend. And obviously it's the retailers, fighting for every last pound in the stretched consumer's wallet and purse. So that's what's happening here. And expect that to go on, because obviously the cost of living crisis is going to continue and the retailers need to take share.
But this is, we're now in what retailers call the golden quarter. This is where most of them make their money during the year. I mean, a drop in food inflation is good news for general retailers, presumably, because it frees up discretionary spending elsewhere.
Yes, I mean, how exactly the consumer is going to react, given that post the pandemic, savings are now at a low rate. We built up savings, we've started to spend them. So how exactly this quarter is going to pan out, either in terms of food or non-food, is going to be very interesting and hard to forecast.
Well, we've been talking a lot about food on the programme this afternoon. We had this trading update from Greggs today. The stock price was a couple of percent off in the end, I think.
Yeah, it's very interesting, Greggs. Greggs is doing really well. I mean, the like-for-like sales, plus 14%. All the elements of trading going well, loyalty, evening openings. So Greggs going really well, opening new stores, plus 100 new stores next year, 80 this year. So a lot working for them. And I think the reason the stock was off is that there was an uplift to guidance, basically. Now, there is a call this afternoon, so perhaps after that we may see a change. But that's the reason the share price was weak. But the company is doing really well in terms of its results.
Yeah, very well-run business, isn't it? And what about Boohoo? I mean, fast fashion has had its issues, yes. And another disappointing set of numbers there today.
Yes, stock down, I think it's about 17, well, the sales were down 17%. Boohoo, huge beneficiary of the pandemic. Now that's unwinding. They're trying to cut costs through the supply chain. Athleisure fading as well. There's issues about returns. Fast fashion. It's a very difficult environment for them at the moment. And the Chinese operator, Shine, coming in with very, very low price points. So really tough environment for Boohoo.
Absolutely. Now, what about Tesla? This is another one that's caught your eye. They missed their production targets the other day.
Yeah, they did. And the reason that's interesting is they've sort of been guiding down on production. And also, there is a price war going on in terms of electric vehicles, with Tesla, and to some extent, leading the way. And what's been happening is over the last 2 or 3 years, the Chinese electric vehicle manufacturers have really stepped up their game in terms of quality, in terms of range, and just in terms of look of the vehicles. And it looks as though they're going to be exporting at some point. And so I think, the battery car and electric car vehicle industry in Europe and the US is in for a really tough time with the Chinese coming. And I think, Tesla are doing their best to resist that. They've got some very aggressive production targets next year. And having said all that, the stock is up more than, it's more than doubled year to date. And who would bet against Elon Musk?
Absolutely. Robert, got to leave it there. Great to see you as ever. Thank you. Well, just before I go, a bit of breaking news to bring in. The last few minutes, number 10 Downing Street has said that Rishi Sunak has spoken to leaders of the G7, NATO, Poland and Romania today, promising to support Ukraine for as long as it takes. More on that in the next hour. Well, that's it from me for today. I'm back at 11:30 tomorrow morning with our early morning edition. Hope very much to see you then. In the meantime, do stay tuned after this short break. Jonathan Samuels will be up with the News Hour and, as I say, a lot more on those comments from Rishi Sunak on the situation in Ukraine. Thanks for joining me today. Cheerio.